All right, welcome back to the NoteWorthy USA podcast. I'm your host. As always, I'm joined by my trusty sidekick, lumberjack friend, Mr. Aaron Halderman. What's up, brother?
Good, good. I wore this special Paul Bunyan shirt just for you today.
I know.
In fact, I told my kids over breakfast, I was like, look, it's Paul Bunyan, kids. And they're like, Dad, it is. Like, I'll even dye my gray beard brown, and maybe this is what I'll do for Halloween. So
there you go. Built-in costumes. Awesome. Okay. Well, it's good to be back, man. This is our first podcast back after hosting, the virtual event that we did. And first of all, I think on behalf of both of us, I just want to say thank you to everybody that attended or bought the recordings after the fact if you weren't able to come check it out in person. I mean, it was a jam-packed 2 days of content. And I think the biggest feedback that I got, just from some conversations I had offline with people was just on wanting to dive deeper into deals. And obviously with the amount of speakers that we had, there just wasn't a lot of time to go far into dissecting a note. I mean, we could barely find time to even get a break, in between speakers and stuff because there were so many great questions and all that in between the speakers. But people wanted to know more about, making offers, where to find deals and going through all that stuff in a more deep and meaningful way. And so Aaron and I, we kind of put our heads together after the event and said, hey, we need to come up with something that can really facilitate that. And we kind of have something special for you guys. So on December 3rd, we're going to be doing an all-day deep dive with the one and only Mr. Kevin Shortell. And he's going to come in and train very specifically on doing due diligence, how he looks at a deal and analyzes it, exit strategies that he looks at, how if he buys a non-performing, how he works it out to get it re-performing and how to price the deals. So if you're really looking for a deeper dive into note investing, you're not going to want to miss this. So you can head over to NoteWorthyWorkshop.com for more information on that event. Again, that's NoteWorthyWorkshop.com. So anything you want to add to that, Aaron?
Yeah, I do. And like Ben said, yeah, thanks for all the feedback and everybody that attended and participated. One of the probably the biggest takeaways we got was like what Ben said already, like doing a further deep dive. And so we'll have a session that we do that kind of goes through a little bit paint by the numbers of what we do in our business. And then we will have a special guest speaker that will talk about raising private capital. And then other than that, it's, primarily Kevin Shortell doing the training on what he does in the business day in, day out, no holds barred, if you will. And so I think it's going to be a unique event. It's definitely priced right. Like it's a no-brainer as far as the pricing is concerned, but I think it'll be good. We'll have some good participation and we'll provide the recordings too for everyone. So yep. I think it'll be great.
Awesome. Well, all right. So we're excited to be back on the podcast. And so on the show today, we've got a great guest. So joining us today is Cody Faller from Faller Financial. And he's going to share with us, how they help investors and institutions, handle selling their notes and a whole lot more. So we're excited to have him. Welcome to the show, Cody.
Thank you, Ben. Pleasure to be here.
Awesome, man. So why don't you start out, give us a little bit of background on you, how you got involved in the business of note investing and where it all came from.
Yeah. So going back to really just, post financial crisis, 2009, I came into contact with a group. I knew an individual in that firm, but they were pretty heavy in the bulk REO business, which was somewhat novel at the time in terms of institutional acquisitions, $5, $10 million, $15 million REO trades with banks. And so that's how I sort of cut my teeth on getting into the note business, because that market started to dry up. Those same institutions were selling the paper. And so that group evolved, and it was a young, small company making pretty big moves and, making mistakes at the same time, which for me, going through that period and seeing how the pricing evolved and where the mistakes were made, it was like, learning on steroids, because it was such an accelerated curve for me being in this group and wearing a lot of hats. But that's, that's 2009, 2010, and then Faller Financial was born out of that period when I went out on my own. And a big reason for that is just going back a bit further. My educational background is entrepreneurship. So right where I'm at here today in Tucson, Arizona, haven't lived here my whole life, but that's where I went to school at the U of A and the Carl Eller School of Entrepreneurship. So that's it was sort of calling me back to an entrepreneurial venture. And growing up, I was always looking for opportunities to be in the free enterprise world, and so Faller Financial, I would say, is probably my first real venture that took root and has been successful. And happy to say 10 years later that that company that started really as an advisory, because like I said, I saw a lot, I wore a lot of hats, and learned about the acquisition side, learned about the real estate valuation side, the title side. I sat with the attorney, worked through purchase and sale agreements. I couldn't have asked for a better, just kind of being thrown in the deep end with the sharks and being forced to learn a lot of different capabilities. And that's how the advisory work started.
So I'm curious about that, because I don't know if any of us on this call, maybe you're different, but I know for me and Aaron, I don't think we got into this business or got into business in any way, shape, or form thinking, all right, it's going to be notes, right? So was that the case for you? Did you know it was going to go in that direction, or was it something you just kind of stepped into and you're like, oh my God, this is something that actually you could do? What was that experience like for you?
Yeah, absolutely. It was sort of synchronicity, if you will. I certainly didn't know. I mean, like I say, the REO component was really kind of the base business, the core business. And then that sort of morphed into, here's this other opportunity. So much like others, I think I kind of stumbled into this business. It wasn't like somebody told me, hey, this note business, go learn it, and here's how you do it. It's just kind of like, okay, it was very fluid. And which is kind of how I do business today as well. I mean, in terms of seeing other opportunities in real estate, the core business for us, which Buffalo Park is the note investing arm of my company. Our financial is more consultancy, where if somebody wanted to sell their loans, or if somebody was looking for us to source loans, we have relationships, and sometimes it's actually for the same group, right? We might source loans for somebody and sell their loans as well, just because we've built that network up. And I can take a look at a pool of loans and say, the best execution on this segment here, if we parse this out, is for this buyer. It might be a bank, and then for this group it might be a hedge fund, and this group it might be so really that's how we've learned who are the best players in the market. And so from an advisory component, it's the relationships, but my personal philosophy has never been, let's try to get a fee for just putting a buyer and a seller together. I always had this just deep curiosity about how to do this business. And so I never got out of the way, if you will. And fortunately, because I was really seeking to add value to the transaction, it wasn't about avoiding circumvention. Folks just realized oh, hey, he's actually helping, not being a hindrance here. It's not like we have to go through the broker and we can't just talk principal to principal. It's actually, I really appreciated, years into the consulting, before I was actually a buyer myself, somebody had described, Faller Financial as the brokerage that acts as a principal, but just isn't the one stroking the check. So it was like we were packaging it up, right to the end, and then somebody else was just buying it. And that's actually what led me to this sort of epiphany that, hey, you're doing all of the work here. Why wouldn't you keep the assets? And that's why we started just a couple years back, starting to really scale the acquisition side, and how Buffalo Park came about, and why we've got a portfolio today that I'm proud to and proud to have, and proud to have the team around me. And I think there's some real interesting talking points that we can get into about why our particular model works well for us. But that's how we got here today, is sort of just falling into it.
I love it. I always said that, being aware of notes and note investing has just made me a better real estate investor, because of all the creative things that you're exposed to when you're dealing with just the paper, aspect of the business. And it's like, a lot of people think it's the holy grail of investing when they discover notes after they've been a long-term real estate investor, whether they're fixing and flipping or wholesaling or or just rentals, whatever it is. And they're like, oh, found it, I'm done with all that crap, I'm just a note person now, this is what I'm doing. And I've always kind of been the antithesis of that. I was like, why would you bail on that? The notes provide great cash flow and income, but the real estate still provides good equity, and so having a little bit of both is always great. Similar to how, if you're diversified in the stock market or whatever, if you will. But I love people's stories and how it comes together. And congratulations on all that you're working on and what you're doing too, and how you arrived at where you're at today. And it sounds like you're an action taker. Learn a little bit, take the action, implement, and scale and build a team. And not everybody does that. They do a lot of talking, a lot of educating, or maybe even more educating, and they've spent a ton of money in that, and now they can invest because they spent like $100K, on their coaching or whatever it is, and they're like, shoot, wish I wouldn't have done that, and so, which happens a lot, and we're kind of, we're definitely against that mindset. Definitely for investing in yourself and educating. So I know you've been out in the space. I know you've been, educating on other people's platforms about what you're doing and stuff. And so why don't you tell us, what you're hoping to accomplish, over the next few years, and kind of like what's your long-term trajectory? I don't think we can really think 10 years down the road, so I think you mentioned like, here's where I'm at, where I want to be in 3 to 5 years.
Yeah. And I presume, the 10-year, plan is kind of like, what will the world even look like in 10 years, right?
Yeah.
And that's really come to light even more in the last, 6 to 8 months. But even before that, right, we just had, Peter Diamandis is a colleague of mine that's in a program, strategic coach up in Toronto. And I've always been fascinated with, he wrote Bold and Abundance and then his most recent book, but it's about the pace of change, right, is accelerating. So, will the note world look drastically different 5 to 10 years from now? I don't know. I mean, I think we're still going to live in homes, and there's still going to be debt, and there's going to be, potentially new creative ways of structuring it. But that's sort of the bedrock. I mean, I think when I think about the single family residence compared to, maybe certain aspects of commercial like retail and whatnot, there's a lot more uncertainty there. The role of the home has expanded, right? It's become a real focal point here, especially with the stay at home or shelter in place concept. I mean, great reason why, or explanation for why Home Depot has been just going gangbusters, right? Yeah. There's a lot of people saying, hey, the home is important. So I think that's been interesting. But for us, our particular, as I was referencing earlier, that works well for us is I think that you want to, as a business owner or operator, really do something on a day-to-day basis that you enjoy, right? Having the conversations that you like to have, surrounding yourself with people that are either like-minded, or you can just you get enjoyment and fulfillment for being around them and learning from them. So for me, the way that I like to spend my days, I happen to like cash flow assets. Okay, there are plenty of other clients and colleagues of mine and a perfect rationale for non-performing notes. We're just not set up that way. But for me, the way that I think that the next 3 to 5 years plays out is very similar to what the last 2 years has looked like in terms of the trajectory of really scaling and building the right vendors around us, having the right asset management on board with me, building the right relationships on the sourcing and acquisition side, and having the right capital. The capital side of things, I really enjoy. It's something I did early on as well. So working with investors is really key. But for us, we tend to buy first and second liens that are performing or reperforming. We have a small part of the portfolio that is non-performing, either it's bankruptcy or foreclosure or just sub-performing. But I love the passive income, mailbox money, kind of build the money machine approach. Okay, so we've gone from a very small, maybe 15, 18 months ago, we had a handful of loans, and now we're north of 60. And our largest acquisition on a single loan was just in the last 6 weeks, and it was $3.6 million. So to go from a small one-off, maybe seller finance transactions, stroking a $50,000 check to, we didn't, of course, pay $3.6 million, but this was a large performing transaction. So what I want to do is always be growing. I always want to be stretching. I always want to be learning. You touched on that, Aaron, is being around people that maybe have done things that you haven't done, maybe have a philosophy that it may be slightly different than yours, is sometimes very good, because then it forces you to say, as long as there's not ego involved, and you say, hey, it's like Ray Dalio, like, why do I know I'm right? Why do I think I'm right? And start questioning the way that you think about things. I think that's, if I was investing with somebody, I would really want them to have that philosophy, as opposed to, I know everything, I'm an expert. Because it's like John C. Maxwell says, like, he doesn't consider himself an expert. He considers himself an authority, but it's the expert that stops asking questions, right? Stops being curious. And so when somebody says, hey, you're an expert note investor, I say, no, I'm proficient, but I see things every day that I didn't know that on the prior transaction. Going back to Ray Dalio again, you can kind of say this is one of those. This looks like one of those, and it goes in that bucket. So you kind of know how you approach it. But that's part of the beauty, I think, of this business is I love being creative. I love problem solving. And I think those are also, they just happen to be two skills that you will need in the future. That creativity and innovation and problem solving is never going to go away. So I've got a 5 and a 6-year-old at home, and those are two qualities that I really try to instill in them. Is those are survival skills as well as networking. Harvey McKay talks about that in dig your well before you're thirsty. Those are super, and being self-reliant. And that's another part of this business that I think is really nice is, look at us, we could do this from a computer. We could do this from a cell phone. There's a lot of things. We can live wherever we want to live. You and I touched on this earlier. I've moved the business to San Diego and moved it back to Tucson, and we didn't skip a beat.
Yeah.
So it's a fantastic business.
That's good stuff, man. So you said something interesting there, and it's only a mindset thing where you went from like this spot of, all right, I'm doing, maybe a 50,000 deal to now I'm up to buying an unpaid balance of $3.5 million. What was the catalyst that made that happen? Was it a mindset shift? Was it all right, I've got this dialed in now, I can, it's an ability to scale up. Like what was the difference maker that made that you be able to make that jump? Because I think that's where a lot of people get scared. They're like, you might not have had $3.5 million in the bank to buy that deal, right? So, and you're saying, okay, well, how do I make that happen? Like, so is it just a questions thing for you that made the difference? Like, walk us through that shift.
Yeah, I think you touched on the mindset piece, and that is huge, right? It's the belief that your next step, your next jump in the business makes sense, and you're ready to do it, and others are ready to follow you if you're raising capital. So that was definitely we've gotten this far, we've proven ourselves, we've got a great track record, we check these boxes. This is just more capital, but it's the same intensity of understanding the downside and preparing for that, and then looking at the upside, right? Yeah. And so that's and I've talked diversification quite a bit to folks around me, and the idea of lots of little income streams is wonderful. You've got that diversification, but there's also a balance there where sometimes a deal just makes sense, and you can deploy more capital. So that's part of it. I mean, that's part of the rationale that some people take when they're in residential, and then they look at commercials. They say, look, this is kind of similar. We can deploy more money. We can scale more this way. And I'm not so much about size just for size, like just being big. Again, kind of going back to the ego thing. It's not like, we just want to say we're $100 million fund. I'm really more interested in kind of the return on energy and the enjoyment and the profitability, right? Like, if you can have profitable, but have, less complexity, that makes all the sense in the world, right? I mean, sometimes it's just, it's just the size is going to create more problems if you have to have more overhead and so on. So I like the idea of, right now we're very lean. I mean, we're a handful of folks, and then we've got our vendors, right? We've got an external team. We've got a fantastic collateral team, external. We've got a legal counsel that's external. We've got, our title folks, our valuation company, our two servicers, and we've vetted them and worked with them and developed those relationships. But that's where the scale comes in as well, right? We don't need a massive headcount to have a lot of loans, as long as we know what we're doing with our vendors as well. But yeah, Ben, going back to the mindset piece, that's part of why when I mentioned strategic coach, why I've been in that. I've been involved with a lot of Tony Robbins events, whether it be Date with Destiny with my wife last year.
Very good event.
Unleash. Yeah, very good. I mean, anybody that's going to spend, 5-6 days for 12, 15 hours a day to 1 a.m. trying to figure out, how, thinking about their thinking and kind of prioritizing and understanding, like, what is it I'm doing this for? I mean, that's, again, it's a little woo, it's a little spiritual, but to me at 43 years old, I'm really starting and having a family and kids growing up. I really think about, like, what are the things that are important to me in my life, and how am I kind of building the business around me and creating freedom and sort of life on my own terms by my own design. That goes back to part of the entrepreneurial aspect, but it's also very much along the lines of a growth mindset and not fixed. I mean, I was just exchanging some thoughts with somebody this morning about an author by the name of Benjamin Hardy. He wrote the book, Personality Isn't Permanent. But most people would think, like, okay, well, hey, Myers-Briggs and Enneagram and these personality tests, they tell you how you are, how you've always been, and how you'll always be. And that's very fixed mindset. That to believe that is super limiting. Yeah. So that's part of it. I think that's where the growth comes, is saying we're capable, we're adding capabilities, we're investing in ourselves, we're learning from other people. This is the next logical step. And it's almost not even about the money. It's more about where you're going. I mean, that's kind of, Jim Rohn concept there, but I want to know how far I can go.
Yeah. About the focusing on that journey, that journey. Right. It's a marathon, not a sprint, and all these kind of different one-liners you hear. I think I got a couple key takeaways that I wrote down. One was, a power team of vendors. Okay, you've vetted them. You have kind of a couple of each. It allows you to scale by running lean with your in-house team of staff, and I think that's key. You also mentioned energy, like focusing on the things that like gives you energy to build on and grow from, and then knowing your weaknesses to, that's where you get the staff involved. That's where you get the power team of vendors involved, and you're focusing on the mindset, the energy, the scale, the management, the leadership, and all those things. And then I'll mention this too, because I think this is key for people. This business isn't for everyone. It's not. It's hard work. It takes perseverance, determination, and specialized knowledge, and actually doing the work. And so sometimes I think at the same time, while I'll say it's not necessarily for everyone, I think people give up too quickly too, or they have a bad experience learning from somebody, or, they have a bad experience on some deals they've done or invested in with a group or an individual, or they themselves messed up. And so I think these are all key things to learn from and do, which really leads me into a question I have for you. Like, Cody, tell us, like, now that you've been at this, 10 plus years, how is the business different today than it was 5-10 years ago? Like, where are we at? What have you seen? And what are some of the things that maybe some challenges that you had that you learned from, and where it is today?
Yeah, I think one of the things that is different and it I think kind of ebbs and flows is just the availability of product in the market, right? And I've heard, it's funny because over those 10 years, I've almost always heard some people say there's no product out there, like it's all dried up. And I think it's really a matter of, where are you looking? Who are you? What circles are you, involving yourself in? How actively are you, really involved in the space to have those inbound opportunities as well as, where you're pushing, out inquiries and trying to get in front of people. So I think what's changed is there have been times where there just was a surplus of product and people could just say, hey, I want a 13 to 15% return and lots of equity on a first lien, and it's got to be super clean, and and they could do that all day long. And then you've seen some compression of yield and more difficulty, and maybe some of the collateral is not as clean in certain trades, and so you're having to kind of deal with more curative stuff. And so I think there's that piece. There's also and this may just be my personal experience. And maybe it's not systemic, but it seems like with foreclosures, there's definitely in the last 6 months, right? Because we've got the COVID, stays and the CARES Act and whatnot. For a lender today and landlords, it's a pretty difficult environment today. I've never really come across quite what we're seeing. In 2009, you did see foreclosure moratoria, particularly in California and some other states. So that's not a first, but it is an environment where I think you need to be really dialed in with understanding your timelines, your carry costs, and whatnot, because you're not going to just move through workouts quite like you might have during different times. And I would expect that to stick around for a while. So those are some ways that I've seen it change. I think there's also more competition. I think there's more people that have come into the space, and that could certainly be we run pay-per-click campaigns for seller finance, and there's, I could just tell you on the cost of our campaigns, right? I mean, the auction process, it costs more on keywords. Maybe less inquiries, more competition, less quality leads. So you really have to, figure out, do we have the right campaigns? Are we allocating the right amount of money in the right states, and really understand all of that. So maybe more competition. And then, we've also seen, Goldman Sachs came into the space pretty heavy. And at that level in the institutional world, they were cleaning up, just about every, a pool that was out there. So you've seen some of the major players, and it's not that they haven't been around, but there's been, I think, a lot of domination amongst a few of them. And it still trickles down through the aggregators down to our level in similar fashion. But I think those are some of the changes that I've noticed.
I saw Governor Newsom out of California just passed and signed a bill into law that at foreclosure trustee sales, they now 45 days after, let's say you bid, you won the property at the trustee sale, for a period of 45 days after that, title's now clouded, and the tenant, a family that wants to have that home as a primary residence, and this is the real kicker, certain nonprofit organizations will be able to go pick up that property now. And I just thought, man, this is crazy. I was like, we're already dealing with this, and that goes to the point that you said, we're probably going to see more of these moratoriums, and it'll be different in different states, and it'll definitely impact, how we do business, and we're going to have to be that much more educated, and experienced, and have to come together as a community and group of educating each other on what's going on, what are some of the things that we need to look for. And I was just like, I remember telling my wife that the other day. I was like, what they just did in California, like last week, they just signed it at the end of September. It was like, we win a property and we now pretty much can't do anything with it for 45 days. I was like, that's almost 2 months. That's 6 weeks. I was like, that's crazy. So
yeah. With rule changes like that, and this was going to be my question for you, Cody, is like, who is your ideal client? But is that changing now, given like the climate of everything? Do you see that changing, or is it going to remain kind of the same, or just with different nuances?
Yeah, I think that, our ideal client is, I love to interact with institutions, in particular banks. We've fortunately had some very successful transactions with a number of banks, not the money center banks, your Wells and Citi, but more regional or even local. And I think there's a good relationship there if we can be super reliable and quick to act for them. If I'll just give you an example. I got a call in the afternoon at like 2:00 on a couple of loans from the bank, and they said, "Hey, we're going to committee at 5:00. Can you bid these? I want to go into the meeting and know where we're at." And so that's a nice place to be. That's kind of an ideal client, right? So that they know they can get good market color from us, and we can be a good liquidity solution to them if they've downgraded an asset or need to just before the end of the quarter get it off the books. And we wrote a blog post, I think it's on our website, the 4-day close, because the same bank in June of last year called on a Monday and needed to close by Friday. And we ended up closing on Thursday, a day earlier. So it was a 4-day close. They called on Monday and wrapped it up, funded, wired. And so what I would like to do is, that's where I enjoy spending my time. There are certain things about that type of relationship when you're buying direct from an originator that's very nice. You kind of remove a lot of the challenges of, okay, can we find a signer for this missing a launch? Or this, gap in the assignment chain, that type of deal, or, they lost the note, all some of the collateral issues. Now there's also opportunity there as well, right? If you're proficient on the curative side, and this goes back to, like Aaron, we were talking about with the power team on the vendors, we happen to have a very good curative collateral team. And so sometimes we can, in our due diligence, say, look, we can figure this out here. It's going to trade at a discount because the seller has defective collateral here or missing collateral. So So that's also, I think, an ideal client for us is where we can serve them at the highest level because maybe others in the market don't have that capability or knowledge, or maybe the patience to work through it. And so, like I said to somebody the other day, I said, look, we've never gotten into really the scratch and dent or, the big jumbo packages that are trading at premiums, because there are folks that do that very well. And for me, going back to the more profitable deals and the deals I enjoy doing, I would rather unravel complexity as get paid to think. And so, that's why I think it's interesting. Aaron, you're right. The business isn't for everybody. It can be frustrating because it can take time. I mean, I just got a first transaction done in the last year with somebody that I had been interacting with at meetings for about 7 years. And that felt pretty darn good, right? Like we continued to meet, we continued to say, hey, we haven't gotten anything done yet. Not sure where the opportunity is going to be, because we had an advisory, we have the advisory side, they have the advisory side, but then, so we kind of were almost competing. But that's another thing that's interesting in the space is you can hold all your contacts, close to the vest and your knowledge and expertise. And you can say, kind of with a scarcity mindset, I'm going to go and I'm going to do well, but by not sharing. And then there's another philosophy, which is there's a lot of opportunity out there. What you do with others is coming back to you, right? And that abundance mindset, I think that I think it might have been Jack Krupe that coined the term cooperation on a panel one time. But the idea there that you've got competitors, but you're cooperating and it's competition, but it becomes more fruitful, all the relationships. I have found that to be the case time and time again.
Well, everything comes back to the concept of giver's gain and having an abundance mindset. I think Bob Berg wrote a book on, the concept of giver's gain. But, even Ben and I and our relationship and partnership came through live events and networking and mutual colleagues and, just putting yourself out there. Whether some people believe in a higher power or whatever, it's like it's putting yourself out there to develop those relationships and to keep at it. I like you did bring up something like really what you've carved out within the note space is your own niche or niche or whatever however you want to pronounce it. I always say niche. That's probably the Texan in me. Anyways, so I, and that's what's great about this space is you can carve out your own little niche. Like you don't have to go compete with other people that maybe have more tools, resources, or maybe even more capital that you can do. You can play in this space because there's so many different aspects of it and also that I think can directly correlate with someone's particular skill set or what they want to learn about. And so that's what I find like fascinating about this state. Typically when you're dealing with actual property, people, typically speaking, they have some knowledge or experience with a hammer, or doing some of the work, because that's kind of what it takes, right? Whether you're fixing and flipping or the due diligence, but because we're dealing with the paper side of it, the property is the collateral and we're concerned about that, but we're not doing the work, so to speak. We may end up if we have to foreclose or do whatever, but that's just not, so I think, I find a lot of people that kind of are numbers driven or have an analytical part of their thinking, a lot of engineers, a lot of doctors, a lot of, attorneys, architects, mathematics, people into mathematics, philosophy, they're in the paper space. Like it just kind of makes sense to them. But, and then there's others that aren't, that then take the time to learn it and become familiar with the financial calculator. They take a class with Bill Tan out of California or Gary Johnston out of, Idaho or Pete Fortunato. And they kind of learn that stuff and educate themselves. So I find it fascinating, where you've carved out a niche that works for you and that you're able to scale that gives you energy, whereas that may not be the case for somebody else. So, what do you think, Cody, are going to be some of the biggest challenges that new investors are going to face investing in notes today?
Well, I think finding the product is really key, right? Because you can have everything dialed in and know what to do, but just not have something to do it with, right? So getting the product is really going to be key. But putting that aside, if you have a means of sourcing, you have some channels, I think, for a new investor, you can get pretty good understanding how to price, right? So I don't think that's really the downfall. You can be introduced to the vendors, and then you can say, okay, well, maybe I don't need to be a collateral expert because I've got one. So right, so there's I think if it's a business that you're looking to do, I think one of the challenges is figuring out, are you going to be all in or are you going to dabble? That's I think a big decision that needs to be made. Either you draw a line in the sand and you say, like, I'm closing this door when the time is right, and maybe that's after you've replenished half of your income or something like that. Dave Ramsey talks about when the right time is to step out. I actually did. I jumped in 0809 and left the pharmaceutical industry. I was in it for 9 years, worked for Merck and Sanofi Aventis and Sepulchre, and left a cushy career, just basically kind of, went to zero on income. And that, worked out for me, but it was very scary. And I say it worked out for me. It didn't work out well during the time. Right. But it's like Tony Robbins says, how was the worst thing that ever happened to you actually the best thing that ever happened to you? So I was stretched beyond belief. I mean, very tough time. But I think that's a decision that one has to make is, are you gonna give this a good runway and say, I may, not have income for a while, but I'm committed to this, right? It's like, are you interested or are you committed? And if you're committed, then you're going to go and you're going to say, look, this didn't work out the first 3 months. It's, lean, but I'm going to keep after it. So I think that it's that determination of really seeing it through. The mechanics, I think you can get from a lot of folks, right? I mean, you can, like I said, you can learn how to price, you can get the right team around you, you can get the right servicer. But it's also building that team and just deciding, what you want to be. I think there's a lot of clarity, and that's why I was, referencing strategic coach earlier is, whether you're in that or you've got, EOS or some sort of, fundamentals that you're thinking about what your goals are, mapping that future out and just knowing where you're trying to get to. I think that's probably, it's sort of the business acumen and it's the mindset piece. That is less easily, I think, taught, and it's you may just be built for it or not, right? Some people just love the idea of the paycheck is coming every other Friday, and good. That hasn't really been, I've always been a horrible employee, so it's I'm okay with the eat what you kill, philosophy, and it's worked for me, but it's not for everyone.
It takes a special kind of nutcase for that kind of lifestyle,
That's right. That's right.
But I think, and we'll go ahead and wrap up here, but I wanted to unpack a couple of things that you said, because for anybody that's a broker, Cody made some great observations here. In the beginning, when he was getting started, it was like, he looked at it from the aspect of like, not how can I just be in the middle and facilitate these two relationships and bring these people together, but what value can I bring to them? And then he talked about it again when he goes to a bank and they've got a particular deal. He's bringing value to them in the terms of speed. And that person can go into that meeting with data that is important for their position. You think that's not valuable? That's incredibly valuable. And I recognize it because it happens for my other company when we're buying REOs. Because it's about speed, it's about commitment. If we say we're going to take it, we do it, and there's no question. And that kind of behavior will bring it back to you tenfold, because people need assistance, they need help, but they need they need that person to be who they say they are and bring value to the table. So I really like that. And I think if you miss that part, go back and listen to it. The second thing is, and I don't think this is a mystery, Cody reads a lot. So I can tell that just from talking to you. I think I'm glad we had you on the podcast, man, because I look forward to the day that we get to meet face to face, because I think we got a lot in common, you know. So we're both big into personal development and thinking big. And those are the kind of people that you want to surround yourself with. And if Aaron was talking about how people want to give up, you know, they hit a piece of hardship. And right now a lot of people going through a big piece of hardship, right? And it would be easy to give up and not do it. And Cody could have easily given up in the beginning for him, where he's just like, oh my God, this is horrible. You know, and you talk about it, things happen to me or they happen for me. And that's a different way of looking at it. But I think people give up because they don't understand their why. You know, they don't have a big enough why. It's not convinced them enough to go through the spots where you're going to get kicked in the balls and have to go through it to make it, you know? So if you haven't figured out your why, I had a guy named by the name of Sean Whalen asked me one time, well, why do you want that? I told him, he's like, what are your goals? And I told him, he's like, well, why do you want it? And I remember just standing there like a deer in the headlights, and I really didn't know the answer, you know? So, and it forced me to really go back and think, is that what I really want? All right, why do I want it? And it's such a powerful question, because once you know your why, you'll find any how to make it happen. And it's good to see that you've done that, man. I'm really excited to have met you and glad to have had you on the show.
It's been awesome. I bet all three of us have read Simon Sinek's Start With Why.
What?
Sure.
So, and if you haven't, for those listening, it's a great book. He published it, I think, 10, 11 years ago or so. And he has some other volumes that have followed up with that. But that book has some really great, impactful stories on discovering your why, and also on leadership, you know, as you build out your business too. So it's a great book. He even has a TED Talk he did on it. But yeah, it's been great. Cody, do you have any other parting words of wisdom or things you want to share as we navigate through the, you know, the climate today? Like any parting words of wisdom?
Well, yeah, I think for anybody that's tuning in here, you know, you're already making a commitment to learn, and you know, as Ben mentioned, I think that the development, there's no better investment you'll make in yourself. It's like there's been this stigma of self-help. It's like, well, you got to help yourself before you can really have something to help others. And so if it's in your heart to give, you know, this is where it starts, is learning and filling yourself up. So I would just encourage folks to continue on their learning journey with you guys and other folks, and keep becoming a master of your craft, whatever it is. And do what really makes you happy. Because, you know, I've gone through that exercise as well with the why do you want that? And then ultimately you probably arrive at, well, because I want to have positive emotions and joy and be blissed out in my life. And if you can figure out what that is, you might kind of shortcut a lot of roads that are leading to nowhere, that you think are you know, kind of your destiny. So I know that's, again, a little bit woo, but then I just also want to share another, The Seat of the Soul, Gary Zukav. If you haven't looked him up and kind of, you know, heard his pitch on the you with the little y is kind of your personality, and the you with the big Y is your soul. And your soul exists before you're born, and it survives after you're dead. It's immortal. And part of your journey in life is to align your personality with your soul. And so that's something, those are things that I think about every day when I ask myself, you know, who am I? What do I want? What's my purpose? What am I grateful for? And who wants to know? And that's just, you know, some Deepak Chopra right there. But, you know, if you're into meditation and you want to kind of noodle on those questions, I think that for me, being focused and exercising my brain as well as my body and having the energy to show up, you're almost destined to succeed.
Cody, you're a beautiful person. So we appreciate the insight and, you know, your words of wisdom. And I hope everybody that's listening in really appreciates that. The next time you're on an airplane, the flight attendant's going to tell you to put your oxygen mask on first. It all starts there. Before you can help anybody else or help your children, you have to breathe and put that mask on first and take that in and be able to help yourself and what drives you and the passion you have. And so really appreciate it. Cody, how can people get in touch with you if they're interested in learning more about what you're doing or your website? Like what information do you want to pass on to everybody?
Yeah, I mean, we're on LinkedIn, Faller Financial and fallerfinancial.com is the website, FALLER financial.com. And look forward to interacting with folks. And then, certainly at your next event, look forward to seeing you guys and meeting other folks there as well.
Right on.
Thank you so much for coming on the show, Cody. It's been a pleasure, man.
Thanks for having me. Appreciate it.